Hello everyone. Hope you've all had a good week. Well, it's been a few weeks actually. Hope you've had a good few weeks since I last did a trade review. Um, but yeah, I was quite excited to make this one today because I had a really good day trading on Thursday of this week. Took two trades, which I don't normally do. Normally I try and keep it to one trade per day or one trade per session. But yeah, Thursday took two trades that were both winners, both really nice trades actually, both on the S&P, and they were only a few minutes apart from each other. So yeah, I wanted to review both of those. The total was I think $16,700, I think, something like that, which is obviously massive. So let's get into it. So we are on the S&P. Let's go out to the daily time frame. So if I'm honest, I wasn't too confident on a bias for indices starting this week, mainly because we've been pushing higher into all-time highs and now we've just been pretty stagnant. So yeah, we pushed higher. We had this drop to take out some internal range sell side liquidity. Then we'd slightly recovered and we'd had a fairly big bodied candle here closing lower, coupled with, if we go to the Nasdaq, we had an SMT divergence. So Wednesday the 30th made a higher high than the 14th, but S&P Wednesday the 30th made a lower high than the 14th. So we got an SMT there. We've had some form of displacement lower, offered some relief off that, and now we've had kind of some displacement lower here. So it's tipping me more towards bearishness, and S&P is the better one to sell because it failed to make a higher high. So those are my thoughts going into Thursday. So if we go down to the hourly, this here between these two black lines, this is Thursday. So this is the day we're looking at. So we'd opened up on the day and immediately been dropping lower, heading towards this level of sell side liquidity. This box here, let's go back out to the daily quickly, is this box here. It's this little daily fair value gap here. And this sell side had been what we'd reacted off of this previously. So yeah, starting the day we can see that's what we're heading for. We made equal lows and then moved higher away from this. And this is one of my favourite signatures because retail sees this coming down, touching it, and immediately moving higher away from that. Retail sees that as a strong level of support. So this move upwards here will induce a lot of buyers. So we go down to the 15. Actually no, let's go to the 5 minute. So remember, this grey line and this box is what we're looking at. So we got below the grey box, touched the line. So now once we've touched that line, any swing high we come up above is going to have buy stops above it. So we came up above here, that's entered people long with their stop loss below here. Then we sort of came down, consolidated, then we had a move higher, but we cleared this level again, so there's more buyers above there. Moved higher once more, and then a big move higher, entering people that have got buy stops above this high here. Then we come crashing lower, we kick them all out here. Now, after we've done that, we get this move here, we wick well below this, clearing this out. We then get a level, a movement of relief, which is us coming back up. We just miss out on touching the low of the daily fair value gap, but we do get immediate rebalance, and we leave this open. Now, believe it or not, this is now a balanced price range, because this fair value gap is bullish. So on the daily, this is just one bullish candle through here. And so now on the 5 minute, we get one bearish candle going through this. So it's nice to see this stay open because this is now a balanced price range. So it doesn't need to come up here. Most we need to do is offer immediate rebalance, which is what it does. So once we've done that, we're now in a state of neutral order flow. So it's taken the sell side, it's offered the relief, so now we see if it wants to continue to go lower, or if it only wanted to come to this, it'll now start to move higher. Obviously, once we got this displacement lower, that tells you that it's wanting to come lower. So we go back out to the hourly. We've cleared this level of sell side, and it's just told us it still wants to keep coming lower. So what do? We zoom out, and we find the next objective that it could be looking for, which is this level of sell side liquidity. Now, just to speed things up, I'm going to label all the levels of sell side liquidity that are important. So it's those two, this one, and also this one. So all you need to know is each of these grey lines is a level of hourly sell side liquidity. And from the daily chart, we are bearish. And we know that we're coming for more sell side than just this. So let's go down to the 1 minute now, actually. So we take this first level, offer relief, and then we keep going. We then take this second level, we offer relief, and then it shows us that it still wants to keep dropping. So once we've got this relief, we then pull back into the range. We've got this order block, so let's label mean threshold of this. So if we wanted to see bullishness from here, we would want to see this level hold. So as you can see, we move higher, then we come lower, and we get a closure below this order block. So once that happens, we are now viewing any move higher as a possible entry to sell. So we're kind of viewing any move higher is a move higher before it's going to come lower. So let's label this as well. So yeah, as soon as this closes lower, any PD array, any premium PD array that we hit is a potential sell. So for example, this candle here touches the low of this inverse fair value gap, so that's a potential sell. Also touches the volume imbalance, that's a potential sell. However, I did not see this entry yet. This would have been my preferred entry. However, after we got this and we continued to move lower, ordinarily I would not be looking for an entry once we'd taken this level of sell side. But given the day that was shaping up, and from the daily chart how bearish we were, I was expecting it to come a lot lower than just this level, this next level. So even though we took it here, I still thought we'd be coming lower. So if we put the executions on, you can see I sold this candle here. I think I sold when it got up to the volume imbalance. Yeah, it's a little bit above that. So yeah, this was your first possible entry, or even this could have worked as an entry. And also it didn't really clear this level by much. So if we'd have really swept this low and then come up, I probably wouldn't have looked to sell that. But we'd only just come below it, not by much, so that's why I felt confident still selling. I'm pretty sure it wasn't going to come higher yet. So yeah, we move higher, get the entry, and then immediately roll lower, and my target is the next level of sell side liquidity. So after this, we've moved a lot to the downside. So at this point, I'm now willing to expect some form of bullishness, which is exactly what we get. If you've watched my other videos, you'll know what I'm looking at here. So once we take a level of sell side liquidity, retail will have sell stops resting here, and they most often put their stop losses above the most recent swing high, which is here. In all of this, there's no other swing high apart from this. So my exit was here. That's where their entries are, looking to sell, because they're looking for breakouts. Their stop losses are above here. So what does the market do? It comes down here. So me and the rest of smart money can hit our take profit, and the rest of retail get entered into their trade, and then it immediately comes right up for their stop losses, sweeps just above it, also reuses the volume imbalance here. Comes up just to the low of that, sweeping out their stop losses, and then this is where I got my second entry. So we're going to go out to the 5 minute. So we have currently cleared this level of sell side, this level, and now this level. So the next level we have is this one here. So I'm going to get rid of these just to make it a bit cleaner. So we've just cleared this level, and this is our next level. Okay. So we're on the 5 minute now. So this was my first trade. Got the entry on the 5 minute order block, and then we ran for sell side. We then get the relief back up into the 5 minute order block, and we get displacement lower. So my strategy is, for example, if we're bearish, watching it take sell side, waiting for it to offer relief so that it can pair that liquidity. It pairs the sell side it's taken, the sell stops it's entered, with buy side, with the buy stops. Then we're in a position just like we were up here. We're taking this low. We'd taken the low, and then we'd offered relief. We took the low, and then, we took the low here, and then we'd offered relief. So that is a position of neutral order flow. It could potentially move higher from there, or it could potentially move lower. That's why we're neutral. We don't want to be entering when we get up to here, because we don't know where it's going to go yet. You have to wait for the market to tell you where it's going to go. And it does that by giving us more displacement to the downside. So taking this low isn't really that significant, because this low was taking this level of sell side liquidity. It's these levels that are significant. So this sell side, this low swept this sell side. So all this does by closing down here is telling me that it wants to come for the next level of sell side. So what I did, I saw this on the 5 minute, I labelled the 5 minute order block, and then I went down to the 1 minute. So then I was looking for what in this leg of displacement lower lines up with this 5 minute order block that we can take. Now ordinarily, when I'm looking to take trades, I enter on the first available PD array. Like this, for example, once it's shown me bearishness, the first available PD array is the volume imbalance. That's what I entered on. But with this trade, because I've already had a profitable trade, I can afford to be a bit more picky and try and get a bit of a better entry. So ordinarily, I probably would have entered inside this fair value gap, but then I'd have to have quite a wide stop. So my entry would have been here, and I'd at least have to have my stop up here. I'm looking for it to be above consequent encroachment of this wick and the highest fair value gap, because that's as high as we can reasonably expect it to come up for. And if my profit's here, we're looking at a 0.65 risk to reward, so that's no good. So this is the 5 minute order block. First available PD array I can see inside of that is this fair value gap. So this is where my entry goes. And again, my stop loss, I think I put my stop loss above this high actually. And my take profit goes there. Now we're at a 1.68, so basically a 1.7 risk to reward. That's perfect. That's what I look for. Anything between a 1 to 1 and a 1 to 2. And as you can see, absolutely immaculate entry. Right on the low of the fair value gap, we got one tick of drawdown. Doesn't get much more perfect than that. But again, I was only able to do that because I'd already had a winning trade. So I wasn't needing to take the first PD array. It could have just tipped this and then run lower and I would have missed it. But I could afford to be a bit more selective. So I used this. It was the first available PD array inside of the 5-minute bearish order block. And then this was a little bit sticky. It came off our entry nicely. But then we waited around for a while. And so once we'd swept this level, ideally I'd want to see as soon as it moves below here, that's when it runs straight for this. But we swept this, gave quite a long wick, and then we retraced a bit. So when this moved down a bit, I thought I'd take some of my position off. So I entered in 13 contracts and I took 5 off here, just in case it was only coming for this and then it was going to move higher, because this isn't really the price action you want to see. You want to see it touch your entry and then immediately run all the way, not kind of sticky like this was. So yeah, I took majority of my position off after we took this, and then yeah, the very next candle, the very next 2 candles, we ran for this level of sell side liquidity. So there we go. I hope that kind of made sense. I do tend to ramble on a bit, but the sort of bare bones of my strategy is waiting for an expansion move, either higher or lower, and waiting for it to fulfill an objective. So that's typically taking liquidity. So I wait for the market to move in sort of one big movement, in this case down towards a level of sell side liquidity. Then once we've taken that level of sell side liquidity, like we did here, I wait for it to come and pair that liquidity. So we're taking sell side here and we're pairing it with buy side. Then we're neutral. Then I wait for the market to just tell me where it's going next. Because it's taken the objective here. If we then overlap this buy side, that's telling me that it wants to keep coming lower. So the next objective must be what it's reaching for. Obviously it doesn't happen every single time, sometimes I'm wrong, but for the most part, that's what the market is seeking, that next objective, because it's already come lower, it's already fulfilled this. If it's going to keep coming lower, it's not looking at this anymore, it's looking at the next one. Or, if we take this level of sell side and it doesn't want to come lower, it will tell me that. It will tell me that it wants to now move higher and fulfill some higher premium objectives. So it'll come down, it will kick everyone out. Usually you'll get a retracement down into a discount PD array, but it won't violate that. It will respect that. So for example, we've got this inverse fair value gap here. Instead of it overlapping and closing below that, it would move lower, take the buy side, move back down into this, but it would then use this to move higher. So we'd look for it to respect this discount array, and then we'd look for it to violate premium arrays. So it would come back down in, we'd get some move higher that violates the PD arrays in here. So for example, we got this bearish order block. We would label mean threshold there. So I'd look for it to come back down in to this, or maybe even just this fair value gap, and then I'd look for a closure above this. Then as soon as we close above that, I'm bullish. I'm entering on the first PD array that it gives me, and then we've already cleared this, so I'd be looking for my profit on the next level of buy side liquidity, which would be here. And then just above that, we've got consequent encroachment of this wick, so I might try and extend it and see if it would wick up into that. So that's in the simplest forms, that is my strategy. So I hope you enjoyed, hope you learned something, and have a good weekend. Thanks very much.